Okay, in chapter 3, we're going to be looking at a few things here. First off, we're going to be referencing back to our financial statements that we looked at in chapter 2, and we're going to talk about some sources and uses of cash using those statements. We'll talk about standardizing financial statements, how we do that to make comparisons of companies. The biggest part of this chapter is the next two things. We're going to talk about ratio analysis and the DuPont identity and how that helps us to get into our company and see what's going on in our company. Okay. So here's an example of a balance sheet that we'll use for this chapter. And it's the balance sheet that we discussed in chapter 2, if you remember that. And then an income statement, again, just an example from what we discussed in chapter 2. Okay. First thing we start off with is sources and uses of cash. Obviously, a source of cash is any cash inflow. It occurs when we sell something. The main thing you want to remember here is the decrease in the asset account here. So we want to make sure we remember decrease in an asset account, accounts receivable. Obviously, people paid us. Money that they owed us, inventory, we sold inventory to a customer, or net fixed assets, we sold off some assets that either are outdated or we're no longer using. Okay. Any increase in a liability account is also a source of cash. Basically, when we look at accounts payable, we purchase something, we put that on account. Basically, our supplier is loaning us money. Other current liabilities like notes payable or common stock, if we increase that liability, that means money is coming in. Okay, and then our uses of cash, obviously anything that we buy, just like at home. If we buy a TV or buy a refrigerator, we're using cash. But when we do that, if you notice, it's an increase in an asset. So when we buy that refrigerator, buy that stove, or buy a new piece of equipment or a new factory, our assets go up. Okay. If we decrease any liability, all right, we're using our cash again. Basically, we're paying off debt, which is a good thing, getting out of debt. Okay, so any decrease in that liability account is a use of cash. Okay, now that we have our sources and uses, we kind of have to put that together and figure out what was our outcome for our company. So we do that using our statement of cash flows. This summarizes the sources and uses of cash. Generally, we're going to put them in 3 different categories. We have operating activities, that's net income, just where our inventory, our accounts payable, just from generally operating our business and doing our day-to-day thing that we do with our business. We have investment activities, fixed assets, whether we buy a new plant, sell a new plant, or sell an old plant, and then any financing activities. Again, you can almost take this back to our capital budget decisions, and our capital structure decisions is really kind of what we're looking at here. Okay. So we have an example of a statement of cash flows here, and you can see we have the operating activity, and you can see our transactions. We have the investment activities, and we have the financing activities, how we paid for those investment activities. And we can see at the end of the year, did we have a net increase or decrease? Okay. And then what did that do for us in regards to where we were from before? So from all these transactions that this company did, we can see they had a net increase in cash of $50 for this year. And we can see that made our total cash at the end of the year $108. Okay.